Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on out there? It's February 19th. My friend Curzio, the Wall Street Unplugged podcast, so I break down headlines and tell you what's really moving these markets. Daniel Creech joining me today. What's going on, man? How's everything?
Everything is great, Frank. Happy Wednesday. As always, this is wonderful. Another hump day here.
Another hump day. Did you see the Canada game? Canada-U.S. hockey game?
Yes,
Incredible.
I did. I loved it.
Oh, my God. There was a good rant, too. One of the guys in hockey just talking about how the NBA is so horrible. And when you see a game like that, where, you know, it's so passionate to the players and what they do and everything, it was really good. It was a really good rant this guy had, showing how terrible the NBA is compared to what's going on with hockey. And man, that game, 3 fights in the first 9 minutes.
Well, they were booing. Our next sister state is booing their future national anthem. I don't know what the hell's going on over there.
You don't boo national anthems. You just and I get it. And there was a guy on Twitter who said, "Listen, U.S., you don't get it. You know, we have nothing against you. We have nothing against this. We just think Donald Trump's an asshole and whatever." Listen, let me tell you something. We think Trudeau's a really big asshole, but we would never boo your national anthem.
That.
All right? That guy is probably the biggest destroyer of wealth in Canada that we've ever seen. But, you know, booing your national anthem is different, okay? That you take it to another level. I mean, you want to fire them up, but that was pretty cool. And, yeah, they play again on Thursday for the championship.
Yes, tomorrow, 8 o'clock. And listen, they want to boo the national anthem of the USA. More power to them. They're at home. They can do that. But don't be surprised when you want to fight over it. I mean, that's the thing. You can do anything you want. But again, if guys want to go out and brawl over it, that's fantastic. I have no problem with them guys booing. You can have an opinion. You can hate the U.S. or whatever. It doesn't matter. I thought it was great to see all the fights because it is good to have that emotion and that everything's in context. So everybody out there that's complaining and saying that's not good for kids and all that BS, be quiet, sit down. The adults are now in control for at least a few years. And that's a great thing overall. And again, if you're Canadian and you want to boo, go ahead and boo. And then they fight and then they move on. That's great. That is such a great picture for everybody. And we get to watch it all again tomorrow.
I know. It's great when they fight because it's just, you know, hockey's... It is such a great sport. It's like the best sport. It is amazing. It's just, they fight. That's it. They break it up. It's over. And
go sit down for 5 minutes and then come back.
Yeah, come back and it perfectly. And once it ends, and it's like nothing even happened, right? It's like you can see those guys in the hallway and just be like, "Hey, what are you doing today? What are we going to do? Yeah, sure. I'll bring my wife." Or like it's just so normal. And they had it mic'd up. And after those fights, I think one of the U.S. guys was walking up the ice and they had the ref and him mic'd up. And the guy goes to the ref. He's like, the U.S. guy just got to fight. He's like, "What'd you think of that?" And he goes, "Hey, yeah, that's a great start to the game.
Yeah,
that's awesome.
yeah.
That's the way you play." It was so great. It's like so normal when you're like, "Holy shit!" But I can tell you, they play again on Thursday, and I am going to say this, and everyone, the U.S. people, don't get pissed. I'm talking about money. I love Canada to win this game. It's a pick 'em. You don't fuck with Canada when it comes to hockey. They deserve what they get.
Well, and they got beat. And they got beat. It's hard to beat two teams real quickly back to back.
I'm just telling you, you got Conor McGregor, you got Sidney Crosby. I know they say Sidney Crosby's old now, whatever, but you know, Cal McCarr didn't play the first game, and he's insane, right? So he missed first game. Lots of injuries on the U.S. side too. McAvoy's the best defenseman. I don't think he's playing. The brothers might not be. They're probably going to play, but they're hurt. I just think with this game here, it should be really exciting. The ratings on this game should be massive. From a betting point of view, I mean, the U.S. really beat the shit out of Canada. Canada's a good team, and the U.S. is not going to put the same team on because they got a couple of people hurt. So, you know, it is a pick 'em. I think the U.S. was slightly favored, but it feels like this is a massive game, right? It just feels like it's a massive game.
Absolutely.
It's just like the All-Star break for them, so it's so cool.
And what a brilliant thing to do the 4 nations. I didn't even, I haven't caught as much hockey as I would like this year, but I didn't even know they were doing, I remember them saying they were going to do something different, but it kind of caught me off guard, so just getting to see some of it is amazing.
Well, it didn't get a lot of publicity because I think it was the Olympics, and a lot of guys didn't play in it because of the Olympics. So,
and let's be honest, nobody gives a crap about hockey here for the most part. It's not that popular here, unfortunately.
U.S.?
Yeah.
Are you out of your mind?
Not compared to football, baseball, everybody.
To baseball, it's probably comparable, and I think the NBA now could probably compare.
Yeah, well, I hope so, but I'm just saying.
Because the NBA is just like, it's in full dive mode, but Hockey, U.S. in the playoffs, holy shit. I mean, you see those stadiums, they're starting to open up, they're starting to expand. It's kind of like, I feel like this is like the F1. Like, I feel like remember when hockey was terrible? They were lighting up the puck. They was trying to find ways to make it better. And then they did, the overtime, the 5-on-5 and the shootouts and stuff like that. And then all of a sudden, everything just came together. It's like, some of these sports, even Daytona F1, it's just on fire now. It's like, holy shit, pickleball out of nowhere. What the fuck? Just something happens and the sport just goes like viral. What happens to hockey in the past, like I would say, man, 7-8 years, holy shit. I mean, in terms of popularity, how big these games are now, finally it's starting to pay these guys. But it's not the other three sports yet, but man, it's a lot of fun to watch, man. People enjoying it. So with that said, yeah, that was pretty cool. And I'm going to bring this up really quick before we get into everything. So right after this, I'm interviewing Scott Laporta and Paul Kessler. I don't know if I mentioned those guys, but those are the guys in the private deal that we're doing. And I'm going to tell you what the company it is because it's private and exclusive to us. So if you're an accredited investor and you're a one member, you can get into this deal. It's going to be a deal I invest the most money I've ever invested in a private deal because I did a lot of research on this. I'm not saying that you can't lose money. I'm saying if it does, I'm probably going to lose a lot more money than anyone else that gets in and you're getting in the same terms. I mean, they're offering terms that are fantastic where we're getting at a good valuation, 80 million valuation. The company's doing 40 million in sales. That's a very good valuation because their sales are going to explode because they're doing this roll up. And Scott Laporta has a 30-year history of doing this with Marriott, with Hilton, right? And, they just did it again, too, where they don't just create these companies from scratch and they go into small caps and stuff like that. And maybe you're used to that in the mining industry. These guys go into mid caps. They see the whole thing through. They create these massive companies by doing roll-ups. And if you do roll-ups the right way, like a DraftKings or whatever, and you buy, it works out tremendously, right? If you're very, very, very smart doing it. Some people just don't care. These guys are not using the IPO as an event to sell, right, which is a liquidity event. These guys, they just did a deal. It's called Prairie Operating, PROP, if you want to check it out. They're behind this deal. This is Paul Kessler, who's the finance guy for 30 years, has been doing this. This guy invests in so many things. And every time I talk to him, he's humble as hell, even though he's incredibly wealthy and very, very smart. I learn a lot from him. And he's always telling me about the deals that didn't work out. And I always love that about people that are very successful because it seems like the deals they care about the most or they remember the most and they learn from the most of the mistakes they made, right? And that's why, even with us, we highlight our losers because, we have more winners than losers. So we don't mind saying, hey, you know what, we fucked up sometimes because we do with some of our stock picks. But then you have Daniel who just took a half position off, right? You sold a half position in Palantir for what was the gain?
Yeah, we were up a little over 400%.
Holy shit, man.
So you lock in some gains.
It doesn't get better than that, right? I mean, that's what investing is.
Well, it does, but yeah, I get your point.
I mean, look, we have like a 500% winner in CVO. We have a 108% winner in a few months in Curzio AI, and everyone always asks us, like, what stock you like the most? And if I always tell them what stock I like the most, I'd only give you one fucking stock, right? I'd say don't buy the rest of them, but I really don't know. So when you diversify and you hit that one, it's so big because you could have 3 or 4 losers and you're okay with it, right? That's why, you try to diversify with Smarty. I've been doing this for 30 years. I know you're not going to buy every single stock in every one of our newsletters, but the more you could diversify, because these are heavily vetted stocks that Daniel and I look at, right? We do a lot of research on them. We're going to be wrong sometimes. The ones you're right, you want to let those winners run. And man, we've been on Palantir for a long time. We were right. We nailed that because of the mistakes I told you I made with Netflix, which is cool. But when I talk to Paul Kessler, he's always like that. He's talking about the mistakes he made, and he doesn't make a lot. But these guys have built companies, and if you look at PROP, they just did a $600 million deal. This is a company they took public they from scratch. And now the market cap after this deal is going to be $800 million. They still own 13%. That's something that I find credibility and good character in because a lot of times, you have the Chamaths, right? I mean, look, it's about money for him. And look what he did with, the SPAC that I always talk about, which is, I always forget the name now because I'm just trying to block it out of my head, which is a space company. But
Virgin Galactic.
Virgin Galactic. I mean, him and Branson took $600 million and the stock has crashed completely and you wrecked all the investors. These guys don't do that. They stay around with these companies, right? So the company that I'm going to give you, I'm doing something different because I'm taping that interview with them today and I'm going to release it at a later date to Curzio One members. But the presentation, I'm going to do something different. I'm going to actually give to everyone so they could see it. You still have to be a Curzio One member. You have to be accredited to invest in this deal. But the video and the company we're talking about is Sugarfina. So Sugarfina, they own Sugar Factory. It's a very small portion of it, so don't think Sugar Factory. This is a great business that they took over in 2019, and then you had COVID, right? So it was a setback. And now they managed everything perfectly to where they are. They put themselves in perfect position. Again, a company's generating $40 million in sales. It's private. We're getting an $80 million valuation. The deal is going to include a 6% dividend and full warrants. And these guys are going to do a massive roll-up, and they've already started. They're buying smaller companies that are in consumer space with snacking, beverages, gifts, and they only do this when the cycle is very, very weak. And it is right now in this business where if you look at the deal that they just did with PROP, which is amazing, they just did a $600 million deal with Citigroup leading that financing. And now they have like 10 other companies. And now those companies, the institutions come in. Now you have, volume explode. You have this liquidity. You have all these companies that are in the financing are now going to cover this company. That's what they do. But there's a big gap when you're looking at a company with 40 million to like a 200 million valuation that people don't want to touch. So they're looking to raise money, and we're going to help them raise money. But once you get to the 200 million, $400 million, it's easy to get the financing, the deals and stuff like that. Now they're buying these companies and have all these companies listed. They already bought 2, but in that, probably $3 to $50 million space. And there's so many of these companies sitting in the balance sheets of private equity firms, and they're looking to dump them because a lot of them, they were bought using debt, and they have to refinance that debt at much higher prices. Now, these guys have access to a lot of these private equity funds that are looking to sell this stuff dirt cheap, 10 cents on a dollar, because if they have to refinance the debt, they're going to go bankrupt and start losing a ton of money, and they want that dry powder. So they're getting these companies. They already took over 2. They just took over another one, which is fantastic, and doing the same playbook. And they don't do it often. It's not like, let's keep doing this. They do it, sometimes. But I'm interviewing those guys today, and then I'm going to release that video in a couple of weeks. But I'm going to tape the video to show everyone the presentation, to show what we do behind the scenes with these private deals. And then I'm going to offer Curzio One at a really special rate. I've been focusing on this a lot and seeing, for accredited investors, this is a deal, and there's another deal coming behind this that's fantastic that I'd like for you to get in. This is our premier membership, right? So you get all of our products and services for free forever. You're going to get access to our first ever conference, Curzio Research Conference, that we're probably going to have. I would say that's a one conference for one members. We get to meet me and my team and everything, and Daniel and everyone, right, up close and stuff.
I'm invited. Wonderful.
Yeah, I think I'm going to invite you, Daniel. I'll invite you. But, the membership is really cool. It's, you have my number personally. I talk to a lot of people, different deals. It's a good community and stuff like that. It's really cool. And I want to try to offer a special rate so people can see this deal, and maybe a 1-year rate. And then the following year, if you come in, you'd be able to take that price off of that, right? So we're trying to find something, because it's not often we get really good deals across your plate that are really exclusive to us. And the deals that we're getting now, and, it's all the hard work that we're all doing and the contacts and stuff like that. We're getting in with really good members who high profile people. You can get it to 100 deals if you want private. I mean, Reg A deals are all about that. I don't think I've ever seen a Reg A deal actually work ever. I mean, that means, you don't need the Reg D to credit investor filing. It's kind of like kind of like the way that you rob investors, and it's okay because everyone wants to get in private deals. These are really high quality deals. Not all of them work, but this one and the one that's coming behind it are really cool in 2 and 1 month, which is cool. And we do about 3 or 4 of these a year. But if you're interested in learning more about Curzio One, frankcurzioresearch.com. You're going to get the interviews that I'm taping today. I'm going to release them to One members in 2 weeks from now, and I'm going to ask them the tough questions. Okay, it's going to be serious questions about these guys. You're going to see their background, what their plan is, what they plan to do, how much money they put into this deal, everything, right? Everything that I've learned from these guys over the past 2-3 months and about this company, you're going to see in this interview. And then also I'm going to do a presentation that I'm going to send to everyone, just me going over the company and strategy and why I like it so much. That you'll be able to see, but the interviews will be for One members. And we're going to release that probably in the next couple of weeks or so. So lots of fun here with the One membership open, getting lots of demand. We've got probably about 10, 15 people that inquired. Once you do, and you send me an email, I'll set up a meeting with you one-on-one. You get to talk to me. I think I spoke to 2 people so far, and both of them came in for the deal. Most people are going to come in for the deal because the deal's really good. And then if you're a credit investor, it makes a lot of sense to really come in at the levels that you come in at this membership, and also with these 2 deals on slate. I mean, my hope is that after this, you're going to subscribe for the full amount next year and get into everything else. But it'll give you access to a couple of deals to see what we're about, because this is a really cool deal I like to see people come into, because I'm hoping for really good things, and I've done a lot of research on it. I think in terms of the risk profile, I don't see a ton of risk here, because it is a company that's generating money. We're getting at a very low valuation. It does pay a dividend, and these guys are really good. I expect this company to go public in about 9 months, 9 to 12 months. And if it does, we could see sales explode, especially from the roll-up strategy that they're using, where, we're looking at $80 million over the next 2-3 years. Hundreds of millions of dollars. If we see that $200, $300, $400, $500 million, this is a stock that's going to be a 10x for us, and that's what I'm hoping for. So if you're interested, again, frankcurzioresearch.com. But I did want to get into the markets, because there is a lot going on. We're still in the middle of earnings season, right, Daniel?
Yes, but I gotta interrupt you and stop you, because I gotta talk about something else before we get into earnings, if that's okay.
Oh.
The best. I don't know. Did you see what the best bankster on Wall Street said? It's gone viral.
Yeah, about stay-home workers.
Florida Zoom, Frank.
Yep.
Florida Zoom. And remember, I'm not saying Florida the way Mr. Jamie Dimon did. What are your thoughts? I love this. Here's why I love this. Because, listen, my heart goes out to everybody that wants to work from home. I know some people that are in a position to say, you know what? I really don't like going to the office every day. And everybody that says they're as efficient at home versus the office, I just don't believe. I'm sorry. I don't buy that. There are people that can work from home and do better than the majority. I get that. But we're painting with a broad brush here, people. And Jamie Dimon, I guess it says leaked audio from a meeting or whatever, but this sounds like Frank Curzio. All New Yorkers talk the same. It's hilarious. You guys are just awesome. You know, I'm going to read a quote here just to put this in context. He says, we also had, and you know I'm right about this, when a lot of you were on fucking Zoom and you're doing the following. You're looking at emails, you're sending text, you're talking to the other person, telling them what an asshole they are. I'm thinking, who says this is like Trump? Everybody thinks this and does this and, you know, thinks about this, but nobody really says it. And nobody at the top of a chain, the chain being the largest and most successful bank in the United States. I absolutely love it. I think this is a massive paradigm shift, and it just kind of goes to show about how easy things can fall in line when you actually have leadership and stuff. For those of you that may quit your job or say, hey, I want to change if you don't have to go in the office every day, I get that. I understand that. I'm simply saying that you can't argue with these kind of results, and I think it's a great opportunity. If you want to prove your value and work from home and show that the results speak for themselves, that's fine. But I just loved his straightforwardness. Hey, if you don't want to work here, you can use your feet and walk away. Don't be mad at me. I'm not mad at you. This is how you build a great company. I think we need more of that in the corporate level because of the last 4 years, and we haven't. And that's not a political statement. That is more of just a leadership statement. So any thoughts on that, Frank, Did you listen to it, or did you just kind of shut it off?
You know what? I like him. I do. I like him. I don't know if it's such a leadership statement, because I think if you had balls, you would have said that 3 years ago, and not when everyone is okay with it because Trump's now elected. You know, it's kind of like everyone loves Trump now, but if you say you like Trump, you know, especially in Hollywood, you got fired, right? It's you know, who's the guy who came out in football who said that, you know, he was gay, and and everyone was like, you know, oh my God, you're so brave, you're so brave. I'm like, I didn't think he was that brave, because the whole world has shifted where, you know, back in my day, you know, if you say you were gay, you probably got your ass kicked. Now, you know, you get your ass kicked if you're not gay, you know, so it's kind of like the whole world. Like, I didn't think it was that brave because it's such a different world. I thought what Magic Johnson did when he said that he had AIDS was incredibly brave, because everyone was afraid to go, like, you know, within 3 blocks of the fucking guy back then with AIDS. No one really understood it, right? So my point is, when I look at you know, a lot of times he says stuff, but he says them at the right time. I would have liked if he said this a while ago, because this has been going on for 5 years.
Gotcha.
But with that said, listen, you know, good. He's right. And I think people have to realize, like, the whole, you know, when it comes to like freedom of speech and watching football and people kneeling down, you don't have freedom of speech at your job. Okay. And if you think you have freedom of speech, again, I say you could stand up on your desk and say, hey, I think, you know, if you're a guy, say, I think men should make one woman and women are assholes, and see how quick you get fired. You'll be fired. It's like, you don't have freedom of speech at your job or at a workplace, right? So, you know, if you were controlling the workplace, you could say, hey, listen, fuck off. You're coming in or you're done, right? Because definitely the numbers are there with productivity. We have people that work mobile, and most people work mobile, and we make it work. And if it doesn't work, then you better get your ass in the office, or, you know, I'm going to fire you, right? And that's very, very important. So in some areas, especially in those circles, I mean, I have my team coming here a lot and stuff like that. It's different, the management team, but, you know, you're the boss. You get to say whatever you want. I just, you know, it's a leadership thing. Yeah, if you said it a couple of years ago, I would have been like, you know, okay, that's really cool. But, you know, you said it at a time where everyone's, you know, you're going to be a hero for saying something like that right now, especially with Trump coming in. But, you know, I'm glad it went viral. It's very true. And we'll see. It's a different world now, right? I mean, we were rewarding people for not working hard. We were rewarding people for not working at all. We were rewarding criminals, right? And you forgot about people who really worked their ass off to support their families. And what about those fucking people, right? And now, you know, that's why I think a lot of people turn and voted for Trump, because you're like, what the hell is going on here? And even people that really don't like it, they're like, it's much better than we currently have. So, you know, good for Jamie Dimon. I think he's right, and I agree with it. And yeah, that did go viral, and he's getting a lot of credit for it. So,
all right, let's get something valuable.
Good for him.
You want to talk about earnings?
Oh, earnings. I mean, earnings, listen, I'm going to be honest with you. If you look at earnings right here, We're about 70% into earnings. I think it's 60 to 63% of the companies reported since Friday, and then we have companies. I think it's going to be probably like 75% by the end of the week. But holy shit! I mean, if you're looking at these numbers, 62. So if you have 62% of companies reported, this is as of Friday, right? After this week's going to be over 70. So we look at Friday, Q4. They're reporting year-over-year earnings. The growth rate. You know what the growth rate is?
10% plus.
All right, so the growth rate is usually like 8% on average historically, right? And sometimes you go 10%, 12%, holy shit, and you'll come off. Remember, these are year over year. So if you didn't do good the year before, chances are you're going to do really good now, right? So 2022 was kind of a weak year. The market crashed, right? And then you had 2023, and you had a good comparison to the other year. All right, we're coming off really strong earnings, right, from last year. Year over year, Q4 from last year, we're growing at 17%. It's the highest year over year growth rate in earnings in 3 years. So when people say we're trading at 22 times forward earnings, holy shit, we're usually trading at 17 times forward earnings with earnings growing at like 8%. Okay, maybe 18 times forward earnings on average, right? That's like the 10-year historical rate, 17, 18 times. So when you hit 20, you're like, holy shit, we're expensive. But you have to look at growth. It's why growth has outperformed value for 15 fucking years, right? Because growth matters. If you're growing, this is how you get the Palantirs. This is how you get the Netflixes. This is how you get the Mag 7 stocks. The names that have gone through the roof and the NVIDIAs and all these names, it's because they're growing like gangbusters, right? So growth, you look at all those names, you would have never bought them looking at a PE and saying, holy shit, it's expensive. Or the CAPE ratio, which I tell you, please take that, crumple it up and throw it in the fucking garbage. If you use the CAPE ratio, you know, there was just a home show. You would have never bought a stock in like the last 7, 8 years, 10 years. It's a joke, right? So I hate when you're using metrics without putting things into context, especially interest rates. Yes, interest rates are high, but earnings are growing. I mean, 17%, we're trading at 22 times forward earnings. You cannot say that we're expensive. We are not expensive. Okay, you can't say we're cheap. We're not cheap, but we're not expensive. We were much more expensive a year ago than we are right now. I mean, we're trading at 21 times forward earnings, with earnings growing not as fast, like 11%, right? We're growing much, much faster. So, you know, when I'm looking at the earnings, it's like this holy shit moment. And then, you know, you're looking at earnings for energy companies just came out. So you have Devon and Occidental, both are up nicely today. This is an industry that's gotten annihilated. And what's happening now? We're seeing these industries, even cyclicals and consumer staples and different things, like industries that have lag, like financials. Look at where financials, how much money is poured in financials are taking off, right? And the S&P is near its all-time high here. But you're looking at some of these names where they get so sold off that they make sense. And I think oil is there because Devon, Occidental, decent numbers, but man, it's just the environment's really ripe for that. I know we're going to turn on the oil and shit like that. And we have, you know, Ukraine and Russia. Maybe we settle that. People might think that's bad for oil and energy and stuff. But, you know, just a lot of that is priced in for so much negativity within oil that, man, a lot of these names are just sitting, they're layups. They're very good. They have very strong balance sheets. They're run very, very well, much more better than any time in a down cycle, probably in history. I mean, these guys are still paying dividends and stuff like that. They're buying back stock, and you know, the sector hasn't been doing that good. Oil's been coming down. Now you're seeing a little bit of strength in oil. That might be a sector to turn to. But yeah, the earnings so far has been very, 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 very strong, much stronger than everyone anticipated.
Yes, absolutely. Speaking of Oxy, I just lost my place. Bear with me here 1 second, Frank. So what I like about this is the... You mentioned a couple good things there. So are we going to see this drill, baby, drill from President Trump and his policies? And the Secretary of Treasury, Bessent, is talking about this increase of 3 million barrels per day. Frank, Devon Energy reported, and I don't have the charts in front of me. Are they still up? They were up about 5%
yeah,
earlier.
Like 6% right now. Yep.
All right, sweet. Devon is paying back a lot of debt as well as Oxy. And these two are great learning kind of stocks here because Devon looks like they're going to increase production around 10% from last year to this year. They're a much smaller company. Oxycodone, where's
I
my
like
mind,
that.
Frank? Yeah.
Look at that.
This is back my pill days.
It's great. Oh, the Freudian slip. I love that.
I'm telling you, I was part of that. I should have gotten some...
I think everybody was part of it because anybody who had a surgery, that's what they freaking gave you. But yeah.
No kidding.
Devon's up 10%.
All mine were prescribed out there. Don't worry about me. But so Occidental...
Did you ever drink on those pills?
Well, yeah, Frank, that's how you feel good on it.
Whenever you take a pill and they tell you
You
don't
take
drink,
2 oxycodones and drink a glass of bourbon, and you will feel Florida fantastic.
you do. I know it's so bad to say because
You might not be able to move.
You're gonna get people like emailing in saying, "Well, it's easy to get addicted to those things." But I tell you, man, whenever I take something and the doc says, "Whatever you do, don't drink," I drink every time. Oh man, it's so good.
Frank's the guy that drives around after a hip replacement on like the same day or whatever.
I'm still alive. But Devon's up 10%. Let's get back to
Okay,
that.
so Devon's up 10%. They're increasing production about 10% year over year is what it looks like. They pay a dividend. They're putting all their assets into their smartest and best premium shale plays and stuff. But Chevron, the big dogs, one of the big dogs, they're increasing production, give or take 6%, looking from last year into next year. And then Occidental Petroleum is kind of hanging out around flat because they expect they had 1,463, so this is million barrels of oil equivalent a day for 2024. And their projection for fiscal year 2025 is right around that. It's between 1,385 and 1,445. So give or take flat production. Now, Occidental is interesting because these guys are really paying down some debt targets over acquisitions they've made and Buffett helping them out with that. I got this completely wrong. And here's the learning lesson on A, don't hold on to losers, but B, follow them and understand when things change. So I recommended this incorrectly in Dollar Stock Club all the way back, Frank, in August of last year. We held on to it until October, so basically 2 months, and we took a stop loss. Now, I recommended that stock at $58 and change. The stock today is still under that. I think, with the pop. And my point is, I'm not saying, hey, we should have held. I'm simply saying we got out at the right time. It's been dead money.
It's 51 Occidental, yeah.
But now, it's only 51 right now? Mm-hmm. Okay. So my point is, we would still be down. But now you can take a fresh look. You can look at this and you can reevaluate. They hit some amazing debt repayment targets. They have a solid balance sheet. They're already announced more I always screw that one up. Divestitures. Yeah. Over $1 billion in Q1. They're going to pay back debt for 2025 with that. They're starting to generate a lot of cash. You got Buffett in there constantly buying shares. Listen, I'm a little stung emotionally from this, but I'm not saying to stay away from this forever. I do think there's a lot of great oil and gas plays. We put those in CRA in different portfolios. But I'm just saying this is a teachable moment. Look for increased production. Make sure cost is going down, and you want to make sure you have great operators in smart areas. The big dogs are all in the Texas areas in the United States, as Frank always talks about, friendly jurisdictions and governments. You don't want to be in some small place in Africa somewhere, and a new government comes in and ups your royalty ante from 10% to 90% overnight. And what I just really like this. And one last thing, Frank, I like the coal stocks because I talked about interview with CVX, Chevron Energy CEO, and he says, listen, you go back 20, 30 years ago, oil, gas, and coal made up about 80% of all of our power generation and supply. Fast forward to today, guess what? It's damn near the same. It's just a much bigger system, and that's including solar and wind and such. Mm-hmm. Well, if you look at BTU, and I'm not trying to catch a falling knife here, I know Frank doesn't like watch list. He was cussing about those the other day on a portfolio, having fun. But BTU, Peabody Energy, and Arch, who had to, Frank, I didn't even know that they merged, but Arch Coal, or Arch Resources used to be, merged with somebody, and now it's a new ticker, CNR, excuse me. But anyway, BTU and the CNR, Coal Natural Resources, have absolutely fallen off a cliff. If you're into dirty coal or making money, Frank, I would keep your eye on that.
Yeah, they have. Wow, look at that chart. CNR. Holy cow. 130 to 76 in basically 2 months. But even going back, when I look at Devon Energy and Occidental, they're both, these are names that are down like 11 to 15% for the year. But the chart looks nice right now, right? You see this bump up now that's actually coming back, right? And you look at what these things are trading at. It's like single-digit PEs and stuff. I don't know if that's exactly right at 4 times forward earnings. Maybe I got to just look at the adjustments and stuff like that. But these guys are really good companies. They're trading at their lower levels, and they have all the risks priced in. Where if oil does go higher, these guys are going to do very, very well. And you might see consolidation in that space as well, because some of these prices, and you always have the Exxons, you always have the Chevrons, the BPs. This is what they do. They do it every fucking cycle, right? They're perfectly fit for they prey on these cycles, where these oil companies get over leveraged and get annihilated, and then they buy everyone in the industry, right? I mean, they do it every single cycle. It's amazing. You talk to the greatest people in energy for 30 years, they always say the same thing. They're like, I fucked up the most because they almost went bankrupt 3-4 times, but now they pray for freaking pullbacks. They pray for down cycles because that's when they go crazy and buy the most shit and land and everything. And you're going to see that right now in oil. Oil is just really primed to go a lot higher from here where it is from these levels, so which is pretty cool. But yeah, just to see how much these are down, yeah, it's pretty crazy. But great sector, and a lot of other earnings are coming out. We're going to cover a lot more of those. I want to talk about small caps really quick before we go, Daniel, about the off of the subject at least. But when you're looking at small caps, I believe tariffs is going to be good for them, right? Because you're looking at tariffs, that means more stuff's going to be in the house. And a lot of these companies, when I say in-house domestically, produce domestically. Even though when we see tariff lines, it's kind of like a risk-off event. You see like crypto, you see biotech, you see small caps sell off. I just think when it comes to earnings, these guys are going to be very, very good. And here's proof of it. Because there's a lot of drivers of small caps. And one is having a low VIX, which we have a low VIX right now. High yield spreads are below 3%. Again, everyone's worried about debt. Oh my God, we're going to die. Oh my God, you're going to lose reserve currency status. Again, it's 1970s. I've been hearing the same fucking shit. We're going to see that. We're going to see that we'll see it well before it happens with spreads. Spreads right now, high yield spreads below 3%, very positive for small caps. And the best part of this is going to be the first earnings season for small caps. Some of them are reporting. They report late. A lot of them are going to be reporting now. It's going to be the first quarter, and I just learned this, I don't know if you knew this, Daniel, that they're going to report positive earnings for small caps in over 2 years. This is since Q3 2022. So always saying, well, most of the Russell 2000 that doesn't have earnings, it was 25, 30% of the company. Now there's a shift, right? Because, and this is what I learned even from Paul Kessler, who I'm going to interview again with the Sugar Fina deal, where he was telling me, I was like, why consumer staples? And he was telling me how, there's a big disconnect where the investment funds and funding, they really don't want to touch like the $50 million to $200 million deals. And that's the opportunity for us to really build this up. Because as we build up a company, now we want to do a deal like they did with, Prairie Operating, PROP. They did a $600 million deal and everyone jumps on them and they know all the investment bankers and things like that. When I'm looking at small caps, I feel like there's this like disconnect here, and a lot of people and a lot of investors are underweight. And if you're looking at the active managers, and Jefferies had a report, this is a really cool report, guys. Jefferies had a report, and they were saying that the active managers in small caps are so behind that they need to add alpha to catch up, right? That's a term saying we need to add on kind of more risk or try to, fill in the gaps. This way we outperformance. To get better performance, you're going to have to take on more risk, right? Most of the time. So these are names with higher price sale ratios, higher PEs, are likely outperform in small caps in Q1, maybe into Q2. And Jefferies came out with a report and they listed, very positive on small caps and listed, 14 names that are going to need to come that they really, really like here that could go through the roof because they're underweight and they provide like that alpha for these managers. And, we're going to cover that tomorrow, which is our paid version of Wall Street Unplugged Premium, give you some of those names. One of those names is in our portfolio that hasn't done too good. One of the only ones that is really not too good in our AI portfolio. Our portfolio is doing very well. That's ArcBest. So I'll give you one of those names, but I'll cover a lot of those names that they say. But small caps right now, a lot of these things are sold off, but you're going to see more money, especially that they're underweight right now, that they need to really get in there and stop buying. And you're going to see probably the names that have, again, the higher PE ratios, the higher price to sale ratios, the more aggressive growth names. You're probably going to see money pour into them. It's probably easy trades going forward, which you'll see through our Dollar Stock Club portfolio, which is part of our Wall Street Unplugged Premium membership. But I just want to talk about small caps a little bit because, they've significantly underperformed. Even bull markets, they usually outperform. They just significantly underperformed the markets the past few years. And I think it's time for them. We're finding lots of ideas in our newsletter. Curzio Venture, Curzio AI, small caps as well. So I'm seeing lots of really good ideas, and we've done well. We've done well for the most part in a lot of these stocks, but not the whole sector. I don't know if the whole Russell 2000 is going to go higher, but I'm finding a lot of names in there, and I think you're going to see a lot more money pour into this, which is pretty cool.
What was that stat? First time in 2 years they're reporting what? Growth?
Positive earnings.
Positive. Okay.
Positive
That's
earnings.
Nice.
So, the small caps on the Russell 2000. So, it was a great note. Jefferies did a really good job on that. Again, and this is some of the stuff that we have access to, which is cool that I like to share. I think another thing before we go into, gold and Howard Hughes and stuff like that, there was another story. Bank of America came out with a note. Bank of America comes out with really good notes, Dan. They come out with these really good notes. And global fund surveys and asset allocation and trillions of assets and where it's moving to, weekly basis. And they just came out with their latest note on their global fund manager survey. And I read this to gauge sentiment. And you have all the global fund managers, right? Whatever, it's trillions in assets. And they're saying, where we're investing, what we see the market going to do in the next 12 months or whatever. But the thing that stuck out to me is cash levels. The cash levels are at 3.5%, which is a number you have no idea. I didn't have no idea, whatever, it's that good or bad. It's a 15-year low. Okay. And I'm going to bring up a chart if you're watching this on YouTube, because that's how important this is to understand. Because if you're looking at the markets, and for those who think the market is going to crash, this supports your thesis. Because when you're looking at this chart right here, and they highlight it from 1999, I'm just going to go from 2003 here to 2025. This 3.5% of cash levels, right? That's our average cash level, as percent of their assets and management, 3.5%. It's really never been this low. And the closest it's been is a couple of times. And it's a contrarian indicator, because when they highlight, you can't really see from the 3%, but if you reverse it, right, you look at things backwards, and you're looking at where they had the highest cash levels, and they point out to 5 events, okay? They point to a bunch of events, but I highlight a bunch from 6 of them, okay? It's October 2022, and this is where cash levels were at highs, because right now they're at lows. So if I take the high levels, where was October 22? It was the absolute low, right, before the markets took off in 2023. Before that, when did they have the highest cash levels? Near 6%. April 20. One of the best buying opportunities ever, right after COVID. October 16th and June 12th with 2 other areas. I wasn't too sure of them. I looked them up. The market took off 1 year following those 2 periods. And then the other period was December 08. Again, one of the best times to buy stocks. Yes, you suffered for 3 months as you hit the 666 low from 2009 from January to March. But then the market absolutely surged after that. Absolutely surged, right? So if you're looking at the periods and you reverse this chart, and I have it up on my screen, please take a look, and I'll post it if you want to see it on my Twitter at Frank Curzio. Follow me there. We're starting to gain a lot of followers now, which is really cool.
It's X, Frank.
X, Twitter. That's probably why I don't have as many followers as I should have. So I'm not even naming the platform right. But if you look at this, I'm going to post this chart, seriously. And take a look at it, because I'm highlighting the green areas, and hopefully I can post it. I'm going to cite Bank of America. I think I had a chart Bank of America, and they suspended my account for a couple of days one time. But I always cite everything. But I don't know, maybe I might not put it up. But if you look at this fucking chart, it's pretty crazy. Just go to YouTube channel, Curzio Research, and you'll see it. And at 3.5, usually that's a sign that, it's not good for stocks, because if you reverse this and you see when they have the highest cash positions, it's usually the best time to buy. And that's when they start pouring that money in. And that's when you see a lot of, more liquidity coming into the market now at 3.5%. And then you're cutting government spending. We've seen interest rates are supposed to go lower to stimulate the economy. They're not, they're staying higher. Where's the money going to come to fuel the next wave? It's something to think about, right? Because we always say, hey, you know what? If it's not broke, and that's why we've been long this market, right? In October 2022, Dane pointed out, in that time period, we were pretty bearish. I was pretty bearish. And then, we switched a couple months later, a lot of dynamics changed. It turned out to be, we were late to the party in that. Right now, we're bullish on the markets, but this is something that actually I would look at and be like, usually I'm like, okay, you see so many charts and they say the last time this happened was the credit crisis and the .com bubble and the Great Depression, and this is but they don't. When you really look at the details and you really look at the charts and you understand what they're actually saying, a lot of it's bullshit. This isn't bullshit. This is something that should worry you a little bit. So I thought that was a good note by Bank of America. Good job. I'll try to post this and hopefully I won't get kicked off. X, not Twitter. But that was pretty significant. That was a good, really, really good note that I wanted to share with you guys.
I like that. One of the notes, I was going through that and I saw one of the things that stuck out to me was 77% of those fund managers expect rate cuts in 2025. 46% expect 2 rate cuts, 27% 1, and 4% 3. That's against 1% of fund managers that think the Fed will hike this year. I have to admit, I was surprised by the 77% number expecting rate cuts. I thought that was a little high. Now, I know we have some seasonality and some easier comps coming up over the next, inflation reports and such. But to your point, along with that contrarian indicator, I would look at that as a contrarian indicator as well on the fund side.
Yeah.
You want to talk about 13Fs, Frank?
I mean, yeah, you can get to 13. Let's get to 13Fs, because I was going to go a little bit further into that, but let's get into 13Fs.
Oh, well, no, let's not, we don't want to stop.
No, get 13Fs. Let's go in, because there's a lot of stuff going on, too.
Okay. Did you see Bill Ackman is making, well, actually, I don't want to talk about Bill Ackman yet. I want to talk about Stanley Druckenmiller, because that's my favorite up against your Tepper. Now, he did a great job. So when you go through these 13Fs, these are the filings of $100 million or more and what they have. They are 2 months late, so this is at the end of 2024, so they could be out of some of these positions. So take it with a grain of salt. But Frank, Mr. Stanley caught the end of the year rally and a post-Trump rally because in new positions, he went into the airlines, UAL, AAL, and DAL, so you had to get a quick pop there. He also bought Amazon, no-brainer, wonderful. Wells Fargo getting into, these are all new positions, again, using the banking system there. We've liked financials, and of course, Google he added, all right, and Lilly even after that pullback. But what really caught my eye, and even though I hate this industry, the pharmaceutical healthcare industry, Teva, T-E-V-A, Frank, Israeli-based generic manufacturing drug company. He increased his position from 1.43 million shares. And remember, these guys got a lot of money, so take these with some salt. But Frank, if you increase your position from 1.43 million to 9 million shares, that's a 500% plus increase. That gets my attention a little bit. And what's wild is when you look at Teva on a chart, it had a great rally, it popped up, it gapped up higher, it traded sideways for a little bit, and it's essentially right back down to the levels that it was trading during the quarter, which is when Mr. Druckenmiller was adding to his position. Now, again, I don't know if he's sold completely out of this. My point is, if you're looking to follow these big guys into different names, I would definitely look at Teva because A, the industry, and B, the action in the price stock. And we'll see what happens when they have to file the next 13Fs, which is going to be a couple months away. But that'll be interesting to see if Stanley has kept, increased, or decreased his position. I thought that was interesting. Any thoughts on Mr. Druckenmiller, Frank?
I'm looking at Teva right now, too, guys. I have this up at the chart, and it seems like it made a massive move in December. So he bought 1-point-something million shares, right? I don't know if this
No,
is...
he had 1.4 million, and over the quarter...
Yeah, he bought 1.4 million, like 2 quarters,
Yeah.
like whatever. So he bought it like the quarter before, and that would allow you to say, hey, you know what, he's getting into this, and Druckenmiller has a history of really like adding to a lot of those positions. And then he added a lot more to this position. This thing took off. I don't know if that's the reason why it took off. Teva probably had some kind of news, but the stock absolutely crashed. And I'd like to see when he bought this. You really don't know. It's any time over the past pretty much I would say a little over 3 months, right? Because they closed the books probably a week or 2 weeks ago. And it's that 3-month period before that when they buy it. So I'd like to see when he bought it. Because if he bought it up here, I'm not really too happy if he bought it at 22 because it was trading at in the 20s from mid-December to basically mid-January, end of January, and then it crashed. And I wonder if that's where he added his shares. Either way, you're getting it at a price that is it's 6-month low pretty much. And you talk about one of the best fund managers buying it. That's something you want to take a look at. Like that's definitely something like you want to look into, right? That's how we look at 13Fs. It's not just Warren Buffett bought this, so we're all going to buy that. It's more than that. It's looking at it. That's how I look at Teva, just to take it through my process of thinking. Wow, this stock was up. Okay, he bought it when it was around these levels, and now went all the way up, and now it crashed again, and now he really bought the shit out of it. So getting it at 17. I would say you're probably going to get in below the price, the average cost basis that he has of a fund manager if you buy that stock here. And I think that's pretty cool, right? So, you're not going to take that big of a position. Again, it's not a massive position for him, but in terms of 7 million shares for the stock, yes, it is. But that might be a good buy here just by looking at 13F. And that's how you look at 13Fs. It's not that you're just going to follow a guy into it. You don't know where he bought it. But I could look back kind of where he bought it, and it's pretty much higher than this price. I would guess the average price are close to this. And you're buying it like alongside of him without having to have $5 million to get into his fund and paying, $220. So, which is pretty cool. So that's how I look at some of these things. So, bringing that part up. I don't know if you wanted to go, there's a few that I saw and stuff. I was just looking at Icon as well. I have it up here in briefing. So I just type in 13F and it gives me all of these, which, 13F guys, if you're not familiar, that's, all the fund managers have to report what they're increasing their positions, their main positions, what they're decreasing every single quarter. And it gives you an opportunity to see what they're buying and selling. Doesn't necessarily mean, like I said, you want to buy right after them, but maybe you want to track these things. And when they come down and you have a guy like Druckenmiller adding to that position, Teva seems like a really good buy. Icon didn't buy anything new, decreased a couple of positions. I mean, he's got JetBlue in there, which got to hurt right now.
He had to buy more of his own company, didn't he?
Yeah, he did. He bought some shares of his own company.
Yeah, but I mean, he's going to have to do that.
Yeah.
I think. I guess I shouldn't say he has
Nelson
to.
Peltz increased a couple of positions. U-Haul, Value Act, again, new position in Amazon. So, again, Amazon here you're buying, which is cool. Maintain positions Roblox, which got wrecked, but then came back. Actually, it was up a ton before it got wrecked, and I think it came back a little bit. But I didn't really see 13S where a lot of stuff stood out to me, where everyone's buying a certain sector. I know that we're seeing, Tepper talk his book, and we saw, Baba really take off and stuff like that. But I have to tell you, if you're looking at China, they added $1 trillion. $1 trillion, right? Just which is incredible to me. We're not talking about the U.S., which is a lot bigger, but when you look at the deficit of $1 trillion in a month, okay? And I know they're doing a lot to really stimulate their economy, and I know if you're looking international, the inflows are at the highest levels in Europe. We're seeing a lot of international markets do much better. China actually coming back with stocks, but still the underlying fundamentals in China. I mean, this is like a momentum trade, I think, more of a trade, but I just don't see it still. I still think it's very, very dangerous. It's nice to see Macau kind of bottom out here. You're seeing that where the Las Vegas Sands and the Winds reported decent numbers, get off their lows. I think those are much better buys. They also have exposure to other gaming areas in Singapore and Vegas, obviously. But, just be careful because I think it was JD that didn't do that good? One of the names didn't do that good. It might have been Baidu, actually. I think it fell sharply.
Yeah, Baidu, and then Baba, yeah.
And then Baba did really well.
Because I was joking that President Xi met with Ma from Baba, and that stock popped a little bit yesterday.
Yeah.
And the other ones did not. So that's how you goose economies. You don't only just... So the Chi-Coms increased their debt by $1 trillion in 1 month. Is that what you said?
1 month, yeah.
Look at them coming to the craziest drunken sailor game. Good for
look,
them.
you might see that as a good sign. Okay, that stimulus coming to the markets. But let me tell you something. They've been doing this for 2 years and it hasn't fucking worked, right? And their debt crisis is getting worse. I mean, their economy is getting worse. I mean, you're looking. It's just you're waiting for a bottom there, and you might see in stocks and money pour in because. The U.S. is getting kind of top heavy here. I feel like it's like where the money's going to go to, and they're finally seeing areas that. And I wanted to get to really quick. I don't know if you're done with 13F, so you had anything else you want to discuss? But,
No, I can't be. No, I can save future for tomorrow.
I wanted to discuss gold. I mean, the move into gold is serious here, and it should be. Like we kind of make fun a little bit, and people love gold forever. There's times to buy gold, time not to. We've been very, very bullish on gold and bullish on Bitcoin, which you're allowed to be, and some people would never ever do that, and they just I don't know why. But you could be bullish on both of these things. But when you're really looking at gold, man, I feel like this level of 3,000, everyone's like waiting for, and I really don't give a shit. I really don't. I mean, I feel like this is the level at Bitcoin, Daniel. Remember Bitcoin, it hit 64,000 March 2024, and then it fell sharply off those levels, and it started building back up, and that 64 level, this is in March 2024, I'm sorry. So when I looked the first time I hit that level, it was November 2021. And it just was a shitty market since then. And we're waiting for it to hit the 64,000 level. And it finally hit that in March. And I'm like, big deal. And people are like, oh, it's a new high. And you see that? And I'm like, and we said it, right? We were clear as day. Bitcoin's going 100 grand. And it only took 9 months to reach that. So, news, you have to take the news for what it's worth. They are not on your side. They don't give a shit about you. And that's fine. Just know that, okay? Their job is to create excitement so more people watch so they generate more ad dollars. So they're going to put on stories that are exciting. That's why you haven't seen gold on there in a long time. That's why uranium hasn't been on in a long time. You see these sectors, and they want to talk about AI, and that's why you're seeing everything about Doge all the time, right? Because people want to hear about that because it incites emotions, and people are pissed, and they're going to post, and they're going to engage, and that's what they want. You're an investor. You're different from what these fucking people are, which is fine. I respect them, and I have a lot of friends in the media, and that's fine. They're doing their jobs. Your job is to make money for your fucking family. That's it, period. And to do that, you want to take for what it's worth of what you're seeing online. Right now with gold, they're going to be cheering 3,000. 3,000 is nothing because this is going to 3,500 this year, easily. I think we could be there in the next probably 3 to 6 months once we break through 3,000. Now, what does that mean? Once we go higher, and it's going to go a lot fucking higher from here, trust me. Royalties have benefited. Those are good companies. Large producers starting to ramp up. You're seeing them benefit. You're seeing the buy ratings. Someone just upgraded Newmont from sell to neutral. Yay. Good job. Good timing on that one. I won't tell you what firm that was. And now you see, mid-tiers as well because they're producing. They're benefiting from the higher price. So you had this inflationary thing, which I got wrong because I knew gold prices were going higher. Inflation was going higher in that industry faster than the price of gold. So the profits, they weren't making those huge profits that I thought. Because when you saw like 2,500, holy shit, these guys a few years ago, Daniel, we covered this. The all-in sustainable costs were under $1,000, and then they went up to like 12, 13, 14. So as they were increasing tremendously, 30, 40%, inflation was increasing 30, 40% along with the price of gold, so they weren't seeing their profits. Now that they have inflation kind of not going through the roof anymore, but you're seeing gold prices go up, these guys are going to be printing money. Now the next $500 move from $3,000 to $3,500 and higher, that's the junior miner shit. And this sector has been fucking horrible. I know a lot of good people in there, and I know a lot of crooks in that sector as well. From covering it, I spoke at a lot of events. I was a keynote speaker at some events. Did a lot of speaking with Marin Katusa, Rick Rule and Sprott and stuff like that. Just great resources. And Jeff Phillips, great resources in that industry. That's an industry right now that could generate 3x to 5x potential returns. You're going to see a lot of those names start making their way into newsletter. I'm going to probably start working a lot of those names, consulting, teaching them how to market and consult how to actually make your company exciting, how to tell a story, not just, gold's going higher. Okay, if gold's going higher and you think the dollar's going to lose its reserve currency status and it's a store of value, every fucking gold company is going to go higher. What's specific to your company? Why are you going to outperform? And a lot of those guys don't know how to tell that story. That's what we're helping out. That's why our consulting division is doing very well. And, working with those companies. But that's an area you want to start researching. There's a lot of bullshit in it. But, man, gold junior miners, start looking at them. There's a lot of good projects, a lot of good names in that industry. You scrape off the 10%, man, those things have a lot of upside potential. If you're a believer like I am, that gold's going to go a lot higher and just zip through to 3,000. So don't focus on the 3,000. Everyone's going to be talking about it in CNBC. Big fucking deal. This is going a lot higher than that. We all know it. We all see it. Don't even look at 3,000 or whatever. You should start buying these names now in junior miners, and I think you can do very, very well. And if you have trouble buying them, you don't know what to buy, you can follow our newsletters and follow us. There's a whole system. There's a big system behind this that I've learned. It took me a long time to learn. You don't just want to buy any one of them. A lot of these things are bullshit. They're going to lie to you. It's garbage. There's really 5 rules that we really follow that I actually go over with my investors and also with our subscribers, and they know those 5 rules before we buy any of these companies. And make sure you follow those 5 because it'll limit your risk significantly in an area that's very, very risky.
Yes, well said. Amen, Frank.
Man,
I like that. I like the call 3,500 in a couple months. You said I like that.
I would say within 6 months we got 3,500. That's why even with Bitcoin, it's like 64,000. We paid. It took 3 years to get there. I'm like, it's going $100,000. It's like, okay, fine. And everyone's like, it's an all-time high, and they want to wear hats and shit like that. It's like, to me, it's gold's going to go a lot higher. I mean, now it's finally there. It makes a lot of sense now. I mean, just, demand, you're seeing central bank demand. I mean, the vaults and everything, by the way, with the vaults, it's a nice story. Holy shit, we're going to audit the vaults and see how much is in there. I'm going to be honest with you. I really, really love Polymarket. When I look at Polymarket, and I looked at that during the whole election, and they were dead on. They were dead on with the election. That's people, they're betting. That's decentralized, no bullshit, right? So they have a percentage on if it's fake or there's not the real amount in there, and I think they have it at just 11%, saying that the story
that
basically
it's fake or what? Yeah, what's the 11%?
That the chances of there not being an amount that people are reporting is just like it's
is 11%.
Well, it's 11% saying that. How do I say this? Where it's they think it's accurate, so it's 89% saying it's probably accurate. That it's accurate that they report what's in there is what's in there. Gotcha. So a lot of the stories are bullshit. That's what they're saying. That's what people are betting on in the betting market if it's going to be any different. I'm just saying they could be wrong, but when you have a decentralized, when people are putting money behind it, it's a lot different with what people say because as you know, when you follow people on Twitter or whatever, I mean, how many people told you Bitcoin's going to zero? Nobody fucking shorted. Those assholes, none of those assholes shorted it. Or they'd be on a park bench, right? But they're going to tell you because it's great. It's great for hits. It's great for, whatever. They're advertising dollars and building their brand and stuff like that. But when you're putting money behind it, it's different. Those are the real odds. People tend to lose money back and forth, but most people believe that is accurate, even though it's a very popular story. Believe what you want. Let's see if that comes true or not after it gets audited. And we'll see, because there's a lot of shit getting audited these days.
Not enough. Where do you, quickly here, we can end on this. Where do you come down on that? Do you think it's accurate or would you say not accurate?
I think it's accurate.
Okay.
I think it's
I'll
accurate.
take the other side of that. That's fine.
I think it's accurate.
But this is one of those fun
what do you
things
think? Like
that
someone just took it and disappeared and has it someplace?
Well, I just think they're lying. I mean, it's not a big bet to say that they're lying.
Yeah, but if this is like a
just like the Federal
asset.
Reserve.
Like
the Federal
paper.
Reserve does not get audited. Okay.
Yeah, but
maybe they're telling the truth. Okay. Maybe they're not. But the reason, the impact that the idea that they cannot be audited maybe it's done on purpose, and congratulations, they win, because that is a red flag to me. That is pathetic to me. And so all I'm saying is, if all the gold in Fort Knox or whatever they're joking about isn't accurate, I don't know that would shock anybody. So that's why I was asking about that 11%.
I would be a little shocked, only because, and you're right, but it's easy, just like during the credit crisis, no one knew everything because everything's on fucking paper, right? You're not talking about a hard asset that's stored in a vault, which is easily calculated. And when you take it out of that vault and put it someplace else, someone's going to recognize that physical asset someplace, where the paper, the time it goes through, guys, trust me on this shit, because I'm in finance, and not just because I'm in finance, because I know the industry, the subsidy. I mean, look at Biden and look at every politician. I'm not going to limit this to Biden. They caught Biden red-handed. Right? We're going to give 10% to the big guy, whatever. They can't find it. Because just the subsidiaries that they have and how they bounce it off of so many different countries, and how all these countries, literally, you could deposit your money into one of these banks and it would filter through, I'm not kidding you, through 7 or 8 different banks in about 30 seconds before it comes out the other end, and you have no idea what's going on, and they're all protected through these organizations. They were like, well, you can't do it in Switzerland. Believe me, you could do it in a lot of fucking places. Okay, there's a lot of banks that do it. It's a reason why all you can't look at Apple, look at the big companies, how they filter their money. They're all going through like Ireland and stuff like that because they pay much lower taxes. It's totally legal. But I'm just saying, when you have a physical asset compared to paper, and even during a credit crisis where, AIG, what the fuck is AIG? What is GE doing here? What's going on? Where's the leverage coming from? How come everyone's leverage? Where is all this shit? Because it's all off balance sheet garbage. It's easier to hide paper than an actual physical asset. And I could be wrong on that. And I hope I'm wrong on that, because if that's true, everything is fucking wrong, right? And you're going to see a lot more shit.
That's where I come down. That's where I'm betting.
I know. Listen, it's a popular story, you can say that could be driving gold prices right now. But, when they audit it, I think it's pretty easy just to walk in there and be like, 1, 2, 3. Okay,
now, wait a minute. Was there an announcement? There's no way they audit this. Was there an actual announcement that they're going to audit it?
But they're talking about it.
Well, they're just they're saying, yeah,
how can't you audit it now? They have access to audit, and everyone doubts it. Why
we'll
not?
See. I'm all for it. I just don't think it happens.
Crazier shit right now.
Audit the Fed. You know what? I don't think that happens. I don't think a lot of things happen, but I hope so.
Yeah. No, it's true. That's true. Well, covered a lot of stocks. We're going to cover a lot more names tomorrow. Guys, the Curzio One offer, seriously, if you're a credit investor and you're interested, you want to talk to me about it, it's a really good offer. It's going to be this trial offer because we got a couple of deals coming up. Again, we're not taking value from people who paid, because you're going to have to pay, that membership's going to end, right? If you come into this special membership for a year. But it is at a special price point, and we got some really good deals. So if you're a credit investor, we have a lot of credit investors on our list. We have probably 300-400 people that are thinking about getting into, the Curzio One membership in the past. But if you're accredited and you want to get in some of these deals, again, this is exclusive to us, and we're going to see a lot more deals exclusive to us. And these next 2 deals I'm pretty excited about. And again, you could lose your money on these deals. Be careful. I'm just telling you that I'm putting the most money that I put in these deals for the last 10 years. 12 years in the next 2 deals, because, I vetted these things. I'm excited about them. And again, it's not like it's, if I lose it, I'm going to get destroyed. But, I'm going a little bit heavy on these 2 deals because I really like them, but I'm still diversified through a lot of different deals. So if you're interested, frankcurzioresearch.com. On that note, Daniel, I want to say one last thing. Quick shout out to my dad. Today is his birthday. Okay, he would be 81 today. Died 22 years ago at 59. Fucking crazy. I'm 52. Holy shit. It's crazy when you think about it, but happy birthday, Pop. He did this all his life. And I just wanted to end on that note. But Daniel and I will see you tomorrow, Wall Street Unplugged Premium. And guys, we'll see you then. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Including the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.